non-interest income has been up by about 36%, and that is largely driven by significant volume growth on transactional business. In other words, payments, collections, and particularly electronic transactions on the back of our very successful mobile payment solution.
Having said that, we have seen some improvement in the lending to the private sector, and that for the country as a whole. I mean, what's your position within that context in terms of openness to the private sector to effectively access credit?
Well, I think we have never been shut. In fact, at the height of the economic crisis, our loans and advances book grew by about 16%. However, in the course of 2010, the market loans and advances, in other words, across the whole Zambian banking market, reduced by 4%. And so for us, it's been fairly flat. But we see that in the second half of this year, there's very good hopes of significant growth on the loans and advances book.
This way, there's been criticism that conditions aren't improving speedily enough, and to effectively contribute to economic growth. The question's being asked, what percentage of the private sector is actually getting this credit and at what cost? What's your response to that?
Well, Zanaco is often referred to as the People's Bank, so our loans and advances book is fairly well spread across the various segments that we offer, corporate as well as retail, including the SME business. So in terms of access as a whole, I think we're very well spread. In terms of the cost, I think a general statement is that Zambian interest rates are still fairly high. They are roughly, our base rates across the market are roughly in the 19 to 21% range. So we expect that on the back of reduced treasury bill rates as well as reduced inflation, that interest rates will trend down also.
If we hone in into sectors you're involved in, I mean, a recent survey pointed out that most Zambian private sector firms are involved in agriculture, that the country does not have any financial institution right now that has a very serious focus on that sector specifically. To what extent is this a niche market that Zanaco is targeting?
Well, it's actually not a niche market for us. Agriculture represents about 28% of our loan book, so it's a major part of our business. It's also a business for which we've created a dedicated agriculture team, and it is a major part of our business, and it is supported by the fact that one of the key shareholders of Zanaco is Rabobank of the Netherlands. They hold a 46% stake in the bank, and Rabobank is considered by many as the leaders in agriculture globally, and we are actually benefiting from their know-how in markets like Brazil or Australia to replicate some of their formulas for success in Zambia.
Being the People's Bank, with your focus so widespread, I mean, what are some of the risks you face in managing your NPL ratio specifically, and what are some of the risks that still sit on the horizon that's proving to be challenging at this stage?
Well, I think overall our NPL ratio is pretty much in line with the market. It is too high, we believe, for the market, and including obviously Zanaco. NPL ratios in the Zambian market are around the 14 to 15% level. In the case of Zanaco, we were privatized 3 years ago, and we are managing our NPL book to kind of deal with the legacy issues that we had to deal with as part of the privatization. So we expect that with our loan book continuing to grow, and there's still quite a lot of opportunity for growth on our side given our fairly low loan to deposit ratio, that there's a good opportunity for reduction of our NPL ratios.
Well, talking about reductions, the Bankers Association of Zambia has advised government to reduce company tax for banks in the 2011 budget being announced on October the 8th from 40% to below 35%. And that, of course, to enhance the role that financial institutions play in the growth of the economy. Do you see this really working to alleviate some of the pressure on your end and easing up credit lines even further?
Well, I think there are two elements to it. Yes, anything that can be done around the overall costs of doing business for banks is going to be useful, and tax is a major component. If you look at the total direct and indirect taxes that a bank like Zanaco pays to the government and related parties related to government, we probably pay as much in taxes as we have in net profit for the bank as a whole. If you look at the opportunities around the taxes in general, we also believe that banks are not different from other corporate segments, and the general tax rate in the corporate segment is 35%, and the banking sector does not see any reason why the commercial bank should be discriminated against and pay a higher tax rate.
So where we're possibly looking at more cash being accessible for the bank and its growth aspirations, what are some of the other revenue generating commitments you're focused on to spur on growth for the company moving forward?
Well, I think we are representative of Zambia as a whole. So when Zambia goes well, I think we shall benefit also. For us, I think there's a significant upside in terms of loans and advances opportunities in a more stable economy compared to a year or two ago. And we will continue pushing very hard our non-interest income, particularly the fees and commission, particularly on our mobile payments, ATMs and point of sale businesses, which have been really the engine of our growth for this year.